Up next, we'll be talking about everyone's favorite topic, how to pick stocks. We talked about it earlier already. There are so many cheap stocks now today, but how do you choose which one to invest in? I'm excited to introduce our next speaker, our very own head of research, Charles Ang. Charles has been analyzing companies and stocks for us since 2010, so it'll be interesting to hear from him what he's learned about stock picking across the market highs and lows he has gone through all those years. Charles is also a CFA charter holder. He regularly conducts stock market and financial analysis seminars for COL Financial, the KLUM Trading Institute, and CFA Society Philippines. Please welcome Mr. Charles Ang.
Thank you, thank you. Hello, guys. Let me just get my clicker. Good morning, everyone. How are you all doing? Okay, so quick show of hands first. How many of you guys bought something from your favorite online shopping platform the last week? Can I see a show of hands? Be honest. May sale, di ba, recently? Right? I see a lot of people, all right? Of course, that's one of our favorite, hobbies, right? Di ba? Online shopping, looking for great deals, right? That we have, right? The reason why I ask is that I'd like to borrow from that experience and see how we can apply some of the concepts when we're doing our investment decisions this time, okay? So I believe that when we're buying, making big purchases or important purchases, we either consciously or subconsciously answer these three questions, okay? So, is it cheap? Why is it cheap? And will it remain cheap? Now, so for example, let's say you're in the market for a coffee maker. Let's say you want to replace your old one, right? And you see a listing, a particular model, a particular brand for, let's say, 1,000 pesos. What are you gonna do? What's the first thing you're gonna do? What are you gonna do? You're gonna canvas, right? You're gonna look for other models of coffee makers, right? You're gonna, maybe there's another one for 800 for maybe something cheaper. Maybe there's another one that's more expensive but has more functionality or better quality or better brand name, right? So we canvas, we look for our options. We're trying to basically answer if it's cheap, okay? And then after it's cheap, let's say you do conclude that, yeah, it really does look promising, it really is cheap. What do you guys do next? What do you guys do next? Kung may isa ka na nakita, di ba? What do you guys do next? You look for reviews, right? You look at the rating, look at the review. Bakit kaya siya mura? Di ba? Is the quality good? Is the material good? And so on and so forth, right? And then lastly, let's say you already found your dream coffee maker, right? What do you do next? You try to check whether or not magkakasale ba next week. Diba? May sale ba ngayon? Kailangan ko ba bilhin ngayon? Or bukas na lang, mas mura bukas, diba? So, that's going to the last question, diba? Of course, the worst experience is you buy something today, and then tomorrow, biglang 20% off, diba? That's the worst experience, right? So, these three questions, we're also gonna apply it to the stock market, all right? Okay, so first one, the first question, let's look at it in more detail. The question of whether or not something is cheap or not. I'm sure last week, you're also probably familiar that Apple released their Apple Vision Pro for a super cheap price of $3,500, right? So 200,000 pesos lang, murang-mura. But no, kidding aside, obviously, diba, the initial knee-jerk reaction is that it's expensive, okay? But I'd like to highlight at this point that when we talk about something cheap or expensive, there's actually two levels to it. Okay? The first level is the more simpler one, which is affordability. Literally, it's not affordable because it's 200,000 pesos, right? The nominal price is just high. But that's the level one definition, right? The level two is that, like, cheap relative to what? Okay? Cheap relative to the what alternative do you have? Okay? And the value of money that that product could potentially offer. And I've seen it, argued the last few days that, let's not be, some people, they like argue, let's not be quick to judge whether or not that's cheap or not, because there's literally no comparable in the market, right? Of course, there's one from Facebook, but they are arguing it's a totally different product with different capabilities, right? So what am I trying to say here is that whenever we talk about something, whether it's cheap or not, right, we have to consider the relative to different products, different comparable products, and at the same time, we have to factor in the differences in the functionality, in the quality, and so on and so forth, right? So that's how we do it. So for the stock market, how do we do that? Okay, I'm sure you guys are probably familiar. The most common way we talk about valuation or cheapness in the stock market is PE, at least in the Philippines. So that's price to earnings ratio, right? So literally, how much are you paying for every 1 peso in earnings that the company is generating? Okay, so that's PE for you. And usually, when you hear people talk, a while ago, Edmond was mentioning that the stock market is cheap, a lot of the companies are cheap. When we say cheap, what exactly do we mean? What exactly do we mean? And for most of the time, we're comparing it to something. Okay? So what is that something? Number one, it could be relative to historical multiples. Diba? So, for example, let's say this one is Mega World. Let's say 2 years ago, you've seen it trade at 8 times PE. Okay, 8 times PE. Now, it's 4 times PE. Cheap, diba? Relative to before. Second one, industry average or industry leader. So for example, you might say today, Ayala Land is doing at 18 times PE. So 4 times is cheap, very cheap, right? Or the average of the property sector, right? And you can also have sometimes some rules of thumb, like for example, intuitively, I just know that anything below 8 times or 9 times is cheap, right? And usually, that's just a combination of your experience, all of those 3 benchmarks that we have. So in general, when we say the word cheap in the stock market, it's relative to something. And why is that important? Because, as Edmond said a while ago, diba? When something is cheap, you have to first accept. Diba? My version of that is you have to ask, why is it cheap? Diba? Why is it cheap? Like the coffee maker a while ago, it might be cheap, but if it breaks after 1 day, then it's not worth it, right? If that makes sense. Okay, so how do we do it for the stock market? So first, I'd like you to, just give me a few seconds. No? There's just one simple formula there. Just bear with me. Just mathematically, share price, whatever you're seeing right now in the ticker, for example, the share price you could break it down into your expected EPS, your earnings per share, times a multiple. Diba? If you just mathematically, you can think, diba? Earnings per share times price over earnings per share, the earnings per share will cancel out, price is price, right? So, meaning to say, like a super simple example, let's say there's a company that, let's say, generates 1 peso in earnings per share, okay? And let's say that stock is trading at 10 pesos per share, then simply it's 10 times PE. Diba? That's how we compute. Okay, so why did I make that distinction? It's because that now that we have this market-determined PE, we could now look at the different variables, okay, different variables that could justify something being cheap or expensive. Okay, so just very quickly, these variables are the growth, risk, interest rates, sentiment, and fund flows. So I'll just quickly go over them. Obviously, growth, the higher the growth rate of the company, the more expensive you could justify it to be. The higher the growth expectation. Risk, also very intuitive, the lower the risk, the more premium you deserve. Okay? And then a while ago, Edmond talked about interest rates, right? Diba? Because of the high interest environment right now, you have all these valuations going down, right? Because there's now an alternative. Okay? And then at the same time, Edmond spent like 30 minutes talking about the issues in the US, right? And why is that important? You might be asking, why is it important? We're in the Philippines. I'm investing just in the PSEI. The thing is that those headwinds in the global markets would also affect our sentiment here in the Philippines, Diba? Why? Because of fund flows, right? Because of the next one, fund flows, right? 50% of the volume here in the Philippines are still foreign investors, right? So all these factors, whether fundamental factors or behavioral factors, do impact what's a fair PE for the company. So it's very important for us to understand, okay, why is a company cheap? Because if we don't understand why it's cheap, we won't be able to go to the next point. So what's the next point? The last question, will it remain cheap? This is the most important question. Okay? Why? Because I often say that the end goal is not to buy cheap companies. That's not the end goal. Kung yan yung end goal, mabilis lang yan. Just buy anything that you want. Maraming mura. But the end goal is to profit from these cheap companies. We don't want a cheap company. We want a cheap company that becomes less cheap tomorrow or next week. Okay? So that's the goal. So the critical question here is that we have to judge, or at least to the best of our ability, judge if that cheapness is temporary or permanent. Okay? And maybe if you've been here long enough, you usually hear the word catalyst. Diba? That's the favorite. What's the catalyst? What do we mean by catalyst? The catalyst is just anything that could change some of these variables. Diba? Let's say a growth catalyst would be, let's say the company announces a new product line, or let's say a regulatory requirement suddenly got relaxed and now you could expand more, whatever, and so on. So, and even sentiment, for example, if sentiment improves, then that could be the catalyst that we're waiting for, right? So catalyst is basically anything that could materially change any of these variables that could justify a higher multiple going forward or a higher price going forward. Okay. So this is the most important question, but do take note, na only when you understand the first and the second question can you answer this. If you don't understand why the company is cheap, kung alam mo lang mura siya, but you don't know why, it's so hard to answer this question. So that's always the order. No? Is it cheap? Why is it cheap? And will it remain cheap? Okay. Now, so I know it's mostly theoretical for now, right? And might be difficult for some of you. So for the rest of my time, I want to talk about the 4 common mistakes that I see some investors do, and how the thinking about it using these 3 questions could hopefully we can improve on those mistakes. Okay? So the first common mistake, okay, that I see people do, always avoiding leaders or automatically avoiding leaders just because they're the most expensive. Diba? Sinong guilty niyan? Ayaw, nahiya na. Okay, diba? Automatically, ayaw ko ng SM, ayaw ko ng Jollibee kasi mahal eh. Gusto ko yung dun sa mga exotic, yung mas mura, diba? May upside. But the thing is, first, again, you have to understand, leaders generally enjoy a premium. Right? Why? Because again, just so that it's very clear, because of the lower risk, the greater track record, diba? And also the better liquidity. As you may know, diba? We have funds that are investing in the market. For some funds, they have liquidity requirements. They literally cannot touch smaller names below a certain size. Diba? So supply and demand, the lower the demand, the lower the justified price, right? So leaders generally enjoy a premium. Although, to be honest, okay, when sentiment improves, so Edmond was talking about sentiment a while ago, sentiment now is a little bad, a little on the negative side, right? But when sentiment improves, sometimes we do see that gap between the leader and the second tier or third tier stock narrow. It's really possible under more favorable situations. So that's something to look for. But for now, while the sentiment is not as good, my advice would be to prioritize the leaders instead. So similar to Edmond's last takeaway a while ago, prioritize the leaders. I'm not saying that you cannot buy your second liners. I'm not saying that. But just be very selective and understand why it's cheap. Understand why it's cheap and what could change. What could be the catalyst tomorrow. Okay? So usually, the general order is that leaders go up first when the sentiment improves, but the second liner could follow if the strength is sustained. Okay, so here are some of the leaders that I've identified for you guys. You have BDO, BPI, the SM Group, Meralco, Aboitiz, ICT, URC, Jollibee, all very familiar names to you guys. So I'm sure yan naman ang favorite ng lahat, di ba? Stock picks na lang, di ba? But I wanna show you how, not just give my picks. But if you really wanna force me to pick, these are some of the leaders that I generally like. Okay, so you could definitely choose among them. Okay. And then one more common misconception is that, yeah, if you're a leader, mahirap na yung upside dyan kasi mahal na eh, di ba? Mahal na, quote unquote, right? But in reality, these leaders also have the best chance to outperform estimates. Because again, now sentiment is so bad, so expectations are a little on the low side, right? And for example, for this one is Bloom, right? The leader in the gaming space naman. Right? They beat their the earnings estimates by the analyst by 3 times the past 12 months. Okay? And as a result, the analysts had to upgrade their earnings estimates by 74% during that period. And not coincidentally, I'd like to think, share price also rallied by a similar amount, 76% during the same period. So in fact, it is very possible to have upside, significant upside, even without that multiple re-rating. It's still at 13, 14 times, but because the earnings went up, diba? Remember our formula a while ago, right? Diba? It's earnings times PE. Earnings expectations go up, then your share price could still follow. Diba? Another example would be SSI. So also beat estimates and then share price rallied significantly. I know this is not maybe the typical leader that you might think of. It's quite a small company trading at low valuations, but at least in its like niche, right? It's also, yeah, in some ways, also a leader. Okay, mistake number 2. Okay, buying companies despite worsening growth outlook. So just to put it in, just to describe it to you guys, diba? Usually you see a stock that you've never been able to buy kasi packet lang ng packet, 70 to 80 to 90 to 100, and then one day, it falls to 80 to 70. What do? Uy, baka pwede na. Mura na. Diba? But, I'm not saying you can never buy those. What I'm saying is that before you take the plunge, okay, you have to make sure that the earnings growth did not deteriorate. Okay? Because the growth outlook can change over time, right? It can change over time. So just because it was good before doesn't mean that it's still worthy of that valuations now. So be careful of these inflection points. And what I would advise is that when you see these sell-offs, okay, you have to classify first. You have to distinguish between a temporary weakness, a cyclical weakness, and a structural weakness. So the main difference lang between this would be the time frame, right? I think it's quite intuitive. Temporarily, maybe you're looking at something, right, 1 quarter, 2 quarters worth of weakness in terms of earnings. Cyclical would last an entire cycle. So later I have an example. And then structural would be more of a permanent issue for the company. Okay? So for temporary, I'd like to say that you can trade it if the sell-off is finished, right? You could range trade it, right? For cyclical, I prefer to buy them towards the end of the cycle. So later we have that example. But if you think the cycle is almost finished or starting the next cycle na, then maybe you could buy into these cyclical weaknesses. And then lastly, for structural weaknesses, just avoid them, altogether. Okay? So just some examples. So this one is DNL, diba? So recently, last month, they announced first quarter earnings down 24%. Okay? And of course, they explained this. They said there was some of their customers were still using up their excess inventory. And in fact, if you look at it from a month-on-month basis, the March number was significantly better than the February and the January number. So indicating that maybe it's temporary. Okay? So another reason would be the increased operating expense. As you may know, they have an expansion plant that's set to start operations second half of this year, but they're already incurring operating expense in the first half pa lang. Diba? So if you believe those reasons, if you think it's temporary, personally, I think it's also temporary. If you think it's temporary, then sell-offs could be opportunities to buy. Okay, that's an example of temporary weakness. Cyclical weakness, property companies. So Edmond also mentioned this a while ago, diba? Because of the high interest rates, right? One of the worst hit would be the property sector, right? It may not be seen in the higher end markets, but at least in the lower end, of course, people would have a hard time borrowing to fund their purchases, right? So you see all the property companies are generally weak. I don't really consider yung SMPH as a property company because it's more a retail company for me because of the malls, right? But you could see that across all of the property stocks, there's a general weakness today, right? So if you think, so going back to take away from Edmond, diba? Edmond said that, now, in terms of interest rate, it seems like we're already peaking or pausing, right? But I guess the question is, pababa na ba? Will it go down soon? When it goes down, then I'll be looking at property companies in general. Diba? That's the opportunity for me. Diba? And then lastly, the office demand obviously is also hurting some of these property companies. And I don't think that's structural also. It's just a matter of time. You just have to wait for the supply, the excess supply to be absorbed. Right? But again, cycles. We cannot buy them towards the start of the cycle, okay? Because cycles could take a long time. That's the biggest difference between a cyclical weakness and a temporary weakness. This one could take a long time. Okay? But yeah, eventually, it's going to go up when the cycle reverses. And then lastly, an example of a structural issue would be if the company itself is already towards the latter stage of its corporate life cycle. So this is the typical life cycle, right? The good thing is, most of the companies in the Philippines are in the growth stage, either high growth or mature growth, right? But there's a few that I could think of. Wag na lang natin sila i-mention, baka may magalit sa akin. But there are a few I can think of that in the declining stage because of the industry that they're in. Right? So just avoid them if you think that that's the case. Okay. Number 3, common mistake. Ito, baka marami rin sa inyong guilty dito. Pricing companies with little track record to perfection. Okay? So yung mga companies na wala pa masyadong track record, di ba? Usually, you could see it in IPOs or backdoor listings, di ba? Maraming plans, maraming hype, maraming targets, right? And the exciting thing to do is to assume all the best, right? They said they're gonna open this much. They said they're gonna expand to this much, right? And yes, I'm not saying growth prospects are bad. Diba? That's one of the variables, growth potential, right? The higher the growth potential, the higher the valuation should be. But also at the same time, you have to understand that investors should be compensated for the increased risk. If you have little track record, by definition, you have higher risk. Diba? Just because you're growing very fast, right? And so you have to discount it a little bit. Don't get too excited. You have to discount it a little bit. And also one thing to note, okay, is that you have to be careful of potential capital raising activities. Why? Because in general, for some of these companies, they say that, okay, I'm targeting whatever in 5 years. But if you do your math, if you think about it, for them to reach that goal, they have to spend tens of billions of pesos. And they don't have that money now. So literally, the only way for them to reach that level is for them to raise more capital. And if they raise more capital, there's more shares, more dilution, right? Which also affects your share price. Okay? So instead, what to do instead? Discount them appropriately and wait for concrete signs of success. The re-ratings for these companies, they won't go up. They won't go up overnight. Okay? So you have time. Right? Wait for them to nagde-deliver ba sila sa promise nila, and then maybe you could consider buying. Okay, so I'll just share this one. So this Wilcon, when it did its IPO, as a success story, a good framework of what a young growth success story could look like. Right? So Wilcon IPO'd in 2017. At that time, so it had reasonable valuations. And as you know by now, hopefully, if you have reasonable valuation, it means you also have reasonable expectations, right? So it's easier to beat those expectations. So at that time, the PE of Wilcon is 16 times, right? And then that's even lower than the PSE average at that time. I know now it's 13 times, but at least at that time you're lower than the index average. Okay? At that time also, they gave out a lot of growth targets. So they said they're gonna have 65 stores by 2021. That's in 5 years at that time. And they did in fact beat it. They beat it by, I don't know, 5 stores probably or 6 stores, right? So they were able to consistently deliver on what they promised. They also promised a higher contribution of in-house brands. Diba? So they want to increase that because they offer higher margins. And they were able to do that, right? So consistently, quarter in, quarter out, right? And yeah, so these are the ingredients. No, what other things? Next one, no additional capital raising for them, right? At that time, they had 4.1 billion post-IPO. Until now, they have 4.1 billion post-IPO. So they didn't need to raise more capital. Diba? So for those companies na mga that still needs to raise a lot of capital, just be a little bit more careful because they could issue a lot of shares, right, to fund that growth. And then ultimately, right, they delivered strong earnings growth, average growth per year of 23%, and consequently, not coincidentally for me, share price annual growth is also quite high at 31%. So yeah, so just take these ingredients and try to test your own speculative names kung papasa ba sila o hindi. Alright? Last one. Okay? And I think this is the most important one. Okay? The mistake that we might be doing today is that not considering the cyclicality of market sentiment. Diba? So Edmond, again, talked about this a while. Hindi kami nag-usap pero parang lahat ng sinasabi niya parang applicable diba? So Edmond talked about this a while ago when he said that sometimes you just have to zoom out. Right? Because why? Sometimes when you're in the bull market, when you're making a lot of money, it feels like the bull market is permanent. Parang araw-araw, Pasko, di ba? Parang it's never gonna end. Right? But also the flip side is true. During times like today, we're in a worse sentiment, right? Sometimes it feels like forever. Di ba? Parang, di ba? Yung company XYZ, forever namang mura. Yan, kailan ba siya hindi naging mura? Di ba? Sometimes it feels forever, it feels permanent. But again, if you zoom out, right, and understand that market sentiment is cyclical by nature, right? Because of human emotion, right? And it's only a matter of time, okay? It's only a matter of time before it goes to the next part of the cycle again. All right, so clearly today, so I just want to, for those who are not convinced, right? Clearly today we're in the no interest stage, right? If you could see volume, for example, median daily value turnover, it's now the lowest it's been since 2012, right? So definitely in the no interest stage. In terms of PE, right? Edmond also briefly mentioned this a while ago. Now we're the lowest since the global financial crisis and the COVID decline. Right? We're now at those levels already. Right? So valuations are definitely much lower today. Right? And as a result, if you compared a lot of the companies to its historical multiples, you'd see a lot of them are trading at a sharp discount. Diba? So is it cheap relative to historical? Yes. Why is it cheap? Edmond talked about this also a while ago, right? It's mainly because of sentiment. Diba? I know my first 3 points so far, maybe what I'm saying is a little more technical and complicated, right? But sometimes this part is quite simple. What am I saying? Is that because of the bad sentiment that we are today, because of the no interest stage, almost all companies are discounted relative to historical. So you could only imagine if the sentiment improves, diba? That simple catalyst, right, would lead to a lot of these companies re-rating also. Okay? So in a way, it's the simplest point that I'm making. But also the hardest point to make because it requires a lot of patience. Diba? So to summarize, sentiment moves in cycles. Don't ever forget that. I know it doesn't seem like it, but it is. Trust me, it's a matter of when, not if. Right? And the good thing is, okay, if you believe this, Diba? Eventually, aakyat din naman lahat eh. Eventually, things will get better. If you believe this, and you stick to a good company. So what's a good company? The 4 Ps that we always like to mention, people, product, predictability, potential. If you're buying good companies, it affords you the luxury of time. Meaning, hindi naman natin kailangan umakit sila bukas eh. It would be nice, but we don't need it. Because over time, alam naman natin paakyat siya. Diba? Whereas if you're buying, speculative companies, we're not sure 5 years from now kung nandyan pa siya. Diba? But for good companies, there's a luxury of time. And also today, another benefit is the dividends. Diba? Edmond also mentioned this a while ago. Now, because of the valuations are very cheap, dividends are now super promising, right? Super attractive compared to before. So, good companies na, low risk, right? And then you're paid to it. Right? Of course, we don't know when it's going to go up. Nobody knows. It depends on the sentiment, as I said. But it's a matter of when, not if, at least in my opinion. So what to do instead? Know where you are in the cycle. I always like to say that. Zoom out, as Edmond mentioned, and act accordingly. Negative sentiment ngayon. So wag naman all in bukas, di ba? I mean, negative sentiment, please. It's not going to go up quickly anytime soon. But when it turns, okay, you have to be ready. Okay, you have to be ready because eventually the goal is for all of us to be Boss Dino's granddad, diba? Grandfather, diba? Investing during the bad time, eventually you're set for life, diba? So that's the goal. So that's the objective. All right. So I'd just like to end with just 2 more slides. Okay. So where do you find info? A lot of people are asking me. I guess the easiest one is really through your brokers, diba? We don't charge for research, but we do spend a lot of money on research. I mean, I'm not saying I'm paid a lot. That's not the point. But there's like, how many of us? Like 7 of us in the research team. So we're investing a lot in research, right? And so, but it's free. We don't charge you, but sometimes people, diba, when they see something is free, they don't really put a lot of value there. But yeah, you could definitely get some useful information there. Investment guide or calling the shots. A lot of you, of course, the favorite would be your stock picks. So these are some of the stock picks. It's a monthly publication. The stock picks are at the bottom, right? So you don't even have to read the first 2 pages. Just scroll to the bottom if you don't like. If you read if you want to read, then that's even better. Okay, right? And yeah, so just to summarize before I end. Whenever you see a cheap company, marami ngayon dyan. But again, important, ask the 3 questions first. Is it really cheap? Why is it cheap? And will it remain cheap? Okay? Kasi cheap could be cheap forever. We don't want that. Diba? And then as a general point, we prioritize the leaders, be selective with the second liners. Right? If you're buying sell-offs, make sure you only buy sell-offs for temporary weakness. Right? For cyclical weakness, buy towards the end of the cycle. Discount companies without track record appropriately. Okay? Wag yung puro upside. Kailangan minsan downside din, isipin natin. And then lastly, most important, know where you are in the cycle. Now, negative sentiment, but it's not gonna stay that way forever. I've been saying this maybe, I don't know, however long already. But eventually, I'm gonna be right. Okay? And hopefully, we'll all be rewarded when that time comes. All right, so thank you very much. So yeah.
Thank you very much, Charles. Sobrang packed na naman. Parang our speakers on the average 10 to 15 years of experience squeezed into 30 minutes. Thank you so much. At this point, may I already invite our audience here live or on Zoom to send in their questions via Slido. So instructions are on your screen, on your desks, or we also have 3 mics here at the aisle if you want to pose your question directly to Charles. So to get the ball rolling, Charles, as you mentioned, dahil mo ng experience, no? I'm sure experience consists of learnings. Pwede bang magkamali? For investors here today, beginning or existing?
Yeah, very good question. So obviously, yes. I mean, pwede naman magkamali. Hindi lang pwede magkamali. It's almost inevitable that we're all gonna make mistakes, right? But the good thing is, for each of these mistakes, diba, these are also opportunities for us. Of course, we have to reflect on it. We have to be open-minded. We have to listen to experts, right? And yeah, so experience is always the best teacher. So hindi lang pwede, it's inevitable, no? Kung pwede lang na to choose not to make mistakes, then why not? But
And sana yun na
it's
yung
not
pinili
impossible.
natin
Yes,
lahat.
yes,
Right,
exactly.
right. So what's the best course of action if in case you find that you're stuck with something that, it wasn't as you expected?
Okay, so yung mga ipet, are you talking about yung mga ipet? Okay. Yeah, for me, to be honest, that's really the hardest question to answer. Diba? So I do get a lot of questions now. Okay, let's say stock XYZ is down 80%. What do I do now? I'm down 70%, 80%. What do I do now? And to be honest, I'd rather prefer that you ask that before you buy than to ask me after it's down 70%. Why? Because of course, it's down a lot, and usually it's for a good reason. Not all the time, but usually it's for a good reason. The problem is you're emotionally attached already. And the worst case is if I tell you to sell, okay, and because it's oversold, it rallies 20% next week, murahin mo pa ako, di ba? Kasalanan ko pa. So, siguro, to answer that, I'm not trying to avoid the question, but to answer that, siguro, my best answer would be, if you think that the process is wrong, okay, you fell for the hype, whatever. If the process is wrong, then just scale out. Just scale out. Meaning, sell in tranches. Diba? Para pag nagbenta ka, 20% muna. Kasi masakit hindi ko kaya 100% lahat. Diba? 20% muna. At least pa nag-rally next week, okay lang, may 80% pa ako. Pag namatay, okay lang, at least nakabenta na ako 20%. Right? And then maybe sell over time. And then, if it rallies, that's an opportunity to get out. Diba? Assuming the process is wrong, okay? If you're buying solid companies, yung 4Ps, leaders, right? Even if you're down, you're generally okay if your horizon is much longer.
Okay, thank you very much for humoring me. I had to ask that kasi we've been debunking, you started it, Sir Edmund started it, na parang we have to zoom out a little bit.
Yes.
There are common mistakes that investors do, beginner investors can do, or even existing investors, right? And I also like the way you put it, the analogy that you started with, to connect with us all. Yung mga 6-6,
Yes.
5-5, double-double sales na yan, kung kaya natin kilatisin, yung
Yes.
mga binibili natin
Yes.
sa sales, bakit di natin kayang gawin for our stocks, right?
Exactly.
It's almost the same as that.
Yes,
The same
exactly.
concept. Sige, going into your presentation now, you talked about a mistake that people make, that they avoid leaders. Sometimes, medyo mahal din kasi sila. Not sometimes, but there are leaders, industry leaders that are expensive. And investors may have a limited capital to start with. Meron bang second tiers or leaders that are affordable?
Well, the good thing is it's scalable, di ba? The number of shares you could scale it down. But if you reach that point that if you're talking about just, let's say, anything below like 20,000 maybe, then maybe for those smaller names, di ba? Smaller accounts, maybe you could consider funds. Diba? That's more diversified. Diba? So you could still have exposure to these leaders because most of these funds would buy the leaders anyway, right? So that's also one way for you. And I think later on we're going to be talking about
That's
funds
right, that's
also,
right.
right? But yeah, so for me, it shouldn't be an issue. Some people kasi, I think the bigger issue is sometimes, because their capital is small, sometimes they don't want 20% growth. Diba? If I tell you, 20,000 pesos, this year you're gonna make 20%. Usually, that's a big amount, right? If you have millions of pesos, 20% is a big amount. But if you have 20,000, maybe 20%, anong gagawin ko sa 4,000 pesos, di ba? Lugi pa ako sa oras ko. But ironically, the more we chase growth, the more na nagmamadali tayo, the harder it is to grow our portfolio. So unfortunately, di ba, parang slow and steady, di ba, the turtle wins the race, di ba? So, yeah, process over results. I know it's always very enticing, kahit naman ako especially when I was starting, di ba? Everybody's more excited about yung mga bagger issues, di ba? Yung mga potentially double, triple. Kasi, di ba, how else, di ba? But siguro, maybe to add a little bit of, financial advice, di ba? That's why, especially if you're starting out, it's important to invest, to add to your account regularly if you're starting small. Di ba? So, while you're small, learn the right process, apply the lessons, huwag kayong magmadali, and at the same time, continue to fund your account regularly, 20% of your income, right? And eventually, before you know it, your account is now much bigger. And you know now how to do it. Hindi lang yung chamba-chamba na lang. And, di ba? Kasi, di ba, minsan, if you do it the wrong way, maybe you get lucky once, twice, 3 times. On the 4th time, pag minalas ka, you're gonna email me and you're down 70%. And I don't want that. I don't want that to happen, right? So isang mali lang, it almost reverses all of your gains kasi it's not sustainable, di ba? So slow and steady wins the race, I guess is my point.
Very helpful. You talked about reports that we can refer to specifically for those names, your insights. For my question just now, calling the shots, is it for that list?
Yes,
Hanapin
yes.
namin doon kung ano yung mga second years or leaders
Yes.
that, maybe we can look at
I mean-
exploring even with limited funds.
Yes, exactly. So calling the shots, no, so I often say, kasi a lot of people when they're starting out, they say, sometimes they're intimidated eh. Kasi ang daming technical terms, di ko naintindihan. Di ba? But what I often say is just read every single day. Di ba? I'm sure lahat kayo, ano bang, TikTok na ba ngayon? Di kasi ako TikTok or Facebook or Lazada.
Konti na
Malay
lang,
ko
baka
kung ano yung
makita
app.
ka na namin
Di ba?
doon.
Easily you could spend 1 hour doing nothing, right? Di ba? 2 hours doing nothing. Right? Just spend 15 minutes a day. Diba? Instead of diba, your leisure time, just 15 minutes every single day for 1 year, for 2 years. If you do that, you'll be surprised. Diba? At the end of the day, And calling the shots is just 1 publication a month. So it literally needs just 10 minutes a month of your time. So, what else do you want, right? And you can even scroll down to the bottom and just make it a minute a month, right? So,
Pinadali pa lalo.
yeah, if you really want.
Thanks for breaking it down for us like that. You talked about cyclicality also. Sorry, natatawa pa rin ako sa mga analogy mo eh. Kasi talagang tatamaan ako. Una, consumer ako na palaging bumibili sa mga double-doubles. Ngayon naman, TikTok. Dami kong sinasayang na oras. Anyway, so you talked about cyclicality, Charles. How, the position that we're in now, specifically here in the Philippines, with local equities, with these valuations, how often, in your years of experience, how often do opportunities like these come along? Ilang beses ka na ba nakakita ng ganito?
The answer is 1, right? So it really happens a long time. What do I mean by that? Just a quick anecdote because we have time, no? Quick anecdote lang. When I was starting, I started kasi 2010, 2010. When I was starting, wala pa ako experience before. I didn't have much experience then. So, and then, of course, bull market, diba? So 2011, bull market. And then, during the bull market, of course, you buy, you make money, and you look for another thing to buy. And I've always wondered na, bakit ganito ang mumura ng mga stocks? Diba? Tapos pag bumili ako, after 6 months, I make a lot of money. Right? Bakit ganun? How can people be so stupid, quote-unquote, at that time, I didn't understand, right? So what am I trying to say? At that time, I didn't understand, but now that we're at the opposite end of that scenario, now I understand why. Because now, every single people here, every single analyst that you ask, kahit na hindi na ako, mura ba yung Pilipinas? Mura ba yung company XYZ? May mga ilang exception, but mura ba yung company XYZ? The answer is yes. But no one likes to buy. Why? Because of sentiment. Yeah? That's the thing, because of the sentiment. It's just at the extreme now. Of course, I'm not saying to go all in and tomorrow is going to go up. That's not my point. But when it reverses, you're going to look back today and say that, anong iniisip ko? 5 times PE, good company, hindi ko binili. Di ba? And then now, at that time, it's 10, 12 times PE. Paano na? Ano ang gagawin ko? Di ba? So, again, zoom out. Eventually, it's gonna come. How many times have I seen it? Wala. 1 whole cycle pa lang ako in the Philippine market. Kasi, as Edmond mentioned, from 2009 to 2013 was very, very, very strong. That's the left side of the emotional cycle of investing. Yun yung akala ko noon na parang ang dali-dali, di ba? I could be an analyst forever, I could be an investor forever, no? So I'd be very rich. Yung pala, di ba? The next 10 years would be the other side of the coin. Diba? So hopefully, diba, we reach the flip side again. So, very rare to, very rare. I guess is my point.
Yes, I
Ang
hope.
haba ng sagot eh. No?
No,
Very
that
rare.
was very helpful. Marami tayong anecdote. Kasi kailangan minsan ng kwento eh. Para matandaan, di ba, ng mga tao. So, I guess we have a few questions on Slido. Let's pull some up. Which sectors are resilient or considered defensive in today's market environment? Asked by Dr. Alvin De Jesus.
Usually those that are tied to consumption, diba? And maybe utilities, right? So I gave a few of my favorites a while ago, right? So like your favorite, basta the trick is to stick with the market leaders. No? So for example, consumer, so Jollibee, URC, SM, I consider them consumer, SM Prime. These are all very, very resilient. And then you have your power companies, AP, right? Yeah, so I guess those would be my answers.
Consumer and utilities. Next question. Do you have any more?
Just to add lang, of course, banks, hindi naman sila typically defensive, but they're benefiting from today's environment because of the high interest rates. No? So maybe that could also answer that question.
Thanks for that. How should I allocate my investments in different sectors that would benefit the most when the market recovers?
Okay, very good question. Now, this one is the flip side naman. Diba? We're not talking about the defensive one, but when it recovers. So meaning, if you remember my slide a while ago on the cyclicality, the cyclical weakness, the biggest example I could give there would be the property segment. Kasi they're the worst hit today. Right? They're the worst hit today because of the high interest rates. And I think, and the BPOs, but I think there's also a good opportunity there when the market recovers. Not today, when the market recovers. So that's the critical thing, right? So I guess I would say properties.
All right. That's it. That was so much learnings. Thank you so much, Charles. Thank you for breaking it down for us, your many years of experience. Tama ba? Okay, no more cues on other questions? Oh, sorry.
Yeah.
May humabol pa. No problem. From Ann Garcia, when at a loss, when do you wait under the principle of cost averaging, and when do you pull the plug on a stock?
Very, very good question. So I guess my answer is it depends on your strategy. It depends on your approach. Okay? So basically you could do either thing. But you have to decide before the fact. Okay, that's the critical thing. So meaning, kung trader ka talaga, kasi what are the pros of being a trader? You could theoretically maximize your capital, di ba? In and out, in and out, in and out. Hopefully, you could make more. But it's also much harder, right? But if that's your strategy, then by all means, you should sell at the correct, levels, at the breakdown points or at your stop loss, right? You should always immediately sell. Versus on the other side, diba? If you're more of a longer term investor, more of a strategic investor, then with a longer horizon, the benefit there is that it's in a way much easier to do, right? You don't have to be as active, you don't have to monitor as much, right? And in a way, it's less stressful in some cases, right? So if you're that investor, then yeah, just follow your plan. The only thing we're avoiding is confusion. Parang pag-confused ka, di ba? Wherein you're starting off, you're buying this because you want to time it, you're a trader, you're timing it, it goes down, suddenly you become a long-term investor. Diba? So that's what we're avoiding. But as long as you're sure, diba? No. I know long-term, I know it's a temporary weakness, but I'm a trader, I break down, may weakness na ni-report, I'll sell it, I'll just buy it back eventually. Diba? So it depends on your strategy. The important thing is that you have to be consistent. You cannot change in the middle of the trade. Okay?
Very helpful. So at the onset pa lang, kailangan consistent ka na. You're sure
Yes.
of your investing goals, who you are as an investor. All right. Any more questions?
Okay, this one. How do you know when sentiment is about to turn?
Oh, okay. Same ano kasi, asker.
Okay. Yeah.
How do you know when sentiment or the market is about to turn or when a cycle is about to end?
Of course, it's not easy. Diba? Kung madali lang, di mayaman na tayo lahat. But some clues would be the interest rates. I guess that's the most important clue. Diba? Interest rates. So, now interest rates are not going up anymore, but they're also not declining. So that's one thing I monitor every day. Basically, I also look at fund flows to the region. You could look at that. Lahat naman available online. So emerging markets index, I look at that because we're part of the emerging markets. Diba? Now, US market is going up, but the Philippine market is not. So some people are asking, bakit mahina yung Philippines? Is it because of local factors? I would say not really, because regionally we look exactly the same. Diba? So I just don't have the chart right now, but it's EEM, Emerging Market Index. Right? So you can look at that. That's also another indicator of sentiment. And lastly, even just anecdotes. Diba? Do you see, like, at the peak of the market, you see a lot of people excited about the market, opening accounts, inviting their friends left and right, right? Now, wala, mas mahirap, diba? Mas mahirap yung ganyan. In fact, a lot of people are maybe quitting, growing tired, diba? Losing interest in the market. So even anecdotal evidence could also help.
Few different things, but thanks for itemizing those. Few more questions on Slido. From Elvin Ting, would you suggest to avoid global stocks or feeder funds for now and focus on more on local stocks or funds given the current situation?
Okay, so of course, I'm gonna answer that, but caveat muna, walang sisiyan, ha? It's my personal opinion. So, yeah, but for me, simply because we're further along the cycle, as Edmond mentioned a while ago, yung US mahal pa rin, local, matagal nang mura. Matagal nang umalis yung mga foreign funds. So I would, in fact, if it was me, just focus on the Philippines, right? Especially as a longer-term play rather than, if you're gonna trade it, fine, you could trade it, but it's hard to trade funds, right? So yeah, I would just focus on the Philippines. I think I'm more optimistic here locally than in the US or in the global markets. But it could just be me. There were no guarantees, no? Di ko alam yan.
What is the best consumer company from Jenny?
Best consumer company. Yeah, I gave 4 a while ago. 4 very good options. Again, I'll remind. So Jollibee, URC. Maybe you could even add Monde, but they have a temporary issue, in my opinion. But yeah, they're there. And SM and SM Prime. But DNL also, a good company, but with temporary issue. So it depends on your style also, but those names. Ang dami, no? Best lang pala tinanong. SM na lang. Nasa SM
Ayun,
naman tayo.
kunalify niya.
Para hindi tayo palisin.
Thank you, SMX Aura. What do you mean by no interest? Omar G.
Okay, yeah, so I just didn't go over it because of, time constraints. But I suggest that you look through the emotional cycle of investing, di ba? And what characterizes each part is the overwhelming emotion that people feel. During a bull market, hindi ka naman tatamarin pumunta ng seminar or tatamarin gumising sa umaga. During the bull market, I remember we wake up so excited to go to work, right? Because you're expecting to make money. So at each stage of the cycle, you could just maybe if you could think like survey the crowd, di ba? Ano yung overwhelming emotion? And right now, the overwhelming emotion is people are tired. They don't care anymore. If you tell them, uy, let's say Metrobank is cheap or GT Cap is cheap, huh? What's new? Alam ko na yan eh. Ayoko na mag-invest, di ba? So these emotions that you're feeling, those are the things that characterize the no interest stage. So basically, walang gana, literally, no interest in the market today. Volumes are down 10-year lows, right? So, yeah.
Next question. How to identify if a stock is recession-proof? From Spencer J.
Yeah, so I often say that investing in the stock market is entrepreneurial. So you have to analyze it from a businessman perspective. So the most important is the product. You have to understand the product. If the product is, for example, Chicken Joy, pag nagka-recession ba, hindi kami pupunta ng Jollibee? Oh, the recession-proof, di ba? If the product is, let's say, your condo, not as a recession-proof. Di ba? So it's the product. It's about understanding the product and determining, right, during bad times, how much will it be affected by the headwinds.
Thank you. Next question. May smiley. Can you share what kind of industries as of this year that is now experiencing that so-called in-end game or in declining stage?
Hindi. For example, before, di ba, the telcos had this one, di ba? Parang di man the traditional text messaging, right, we're declining now. It's offset a little bit by broadband, but I'd categorize it more like stable or mature. Declining would be like, like tobacco, for example, the tobacco industry, di ba? So we have, taxes are increased every year, right? And I think more and more every year. For example, the total pie is shrinking, right? So yeah, that's one example.
In a lack of interest environment, what would attract liquidity in the stock market?
This is the problem of all the companies listed today. Diba? Lack of interest, how do we attract? That's the question that I get every single time. And the funny part is, it feeds on itself. Parang chicken and egg yan eh. Diba? If there's no interest, people would exit. More people would exit, and there's gonna be even less.
Lower interest.
But on the flip side, if there's now increasing interest, more people, parang umaakyat na. And then, so it feeds on itself. Diba? Nagiging loop siya, nagiging cycle siya. But what jumpstarts it? That's a very difficult question. Maybe, some are saying maybe it's the foreign funds coming in. I'm not 100% sure of that. Some are saying maybe at some point, valuations will just be too good to ignore. Maybe that's also one possibility. What else? But to be honest, it's really a difficult question, and it's so hard to say. But yeah, I don't have a good answer for that one. A lot of potential ones, but I don't have a definite answer.
From Mary Lolarga, may I know your thoughts on MPI? Do you expect the new valuation company to make the tender offer higher?
Okay, sige. This unavoidable question. No? Okay. We've always said that we feel like the 4.63 initial indication was a low price. So it's a super. It's not an attractive price. However, we've always said before also that as small investors who could not, if you cannot risk getting your stock delisted, because that's the worst case scenario, right? Let's say, kasi mura yung 463, you don't tender. If they get enough shares, the company would get delisted. When it gets delisted, yes, you still have your MPI shares, but it's going to be so difficult to sell it already. Right? So our advice, even if we disagree with the 4.63 offer price, our advice at that before, even until now, is that just to take whatever they're offering. We're basically at their mercy. We hope they don't get the number of shares so that they won't delist. But you just have to take what they give you. Okay, the second part of the question is, what do I expect now? I think there's a good chance, in my opinion, that they might revise the offer price because, at least in my opinion, they've seen a lot of pushback for this price, and so I think it could be a little higher. Of course, no guarantees there. Don't rush buying, go all in MPI hoping for a higher tender. There's also a chance na hindi matuloy yung tender, any kind of tender at all, right? Because as of now, they're in the process of talking to their independent valuation experts, right? Figuring out what the fair price is. If they don't agree, di ba, in any sale naman, the buyer and seller has to agree. If they don't agree, there's a chance it's not gonna push through, right? But yun nga, if you're holding to your MPI, I suggest whatever they offer, even if it's a low price, effectively we don't have a choice. Of course, if you can risk getting delisted, then, and if you think it's unfair, then by all means, you don't have to, it's your choice, it's your shares, right? You don't have to tender it. But for those who don't want to get stuck with a stock that's not listed, then I think we don't have a choice but to tender it. Okay?
That seems to have been the last question. Thank you very much, Charles, again.
Okay, thank you.